record here. Okay. Chart pattern. Candlestick chart for buy, candlestick chart for sell, time frame, price, and lot size. What is a chart pattern? Chart pattern is just an easy way for us to understand when we should be looking for selling entries and buying entries below, which is quite simple. Now, in understanding chart pattern, I want you to understand something at a basic level for beginners, right? Since now I've explained what is a chart pattern. The market, or this chart, when we look at the section chart, depending on the platform that they're using, this is the chart, this is the chart. Now, when we look at interest for making a buy, interest for making a sell, this graph can only create two possible moves, which it can only go up and it can only go down. Now, in the process of going down and going up, it creates a pattern that we can actually go back and recognize as entries for buying and selling, because the market will make sure that we actually get entries. So now let me share some of the chart pattern that I started with when I actually exposed to trading the market. The first one is an M, and the second one is W, which is quite simple and easy for everybody to understand. So what is an M and W? M and W is just a simple format for you to understand. We count one, which is the graph or the price or this chart. When you look at section chart over here, it will be actually going up, and then it will turn, creating number 2 here above, and then from here it will actually swing low, creating number 3, and then it will actually go up to the number 2, and that's when we are looking to take entries of a sell entries going down to number 1, whereby we'll be able to take profit. The W is the very same thing. The graph will create a number 1, go all the way down, create number 2, go up, create number 3, and go down, create number 4, whereby we are looking to take a buy entries. Now, I want us to look at something here which is important in actual trading. This is what we call the candlesticks, right? The candlestick, they have a higher price above and they have a lower price below. So the M will be in this way, which means below there are lower prices and there are lower prices. Above it is W, not an M, and higher prices and higher prices. So we are expecting to actually take an entry at the lower price and get out an exit of higher price, which is simple and easy to understand. Now, in terms of using the structure of these patterns, we have to use a time frame. So which time frame should you use? We have so many time frames that we can use, but then I want you to note something in using a time frame. And in using time frame, you must understand, let's just tap section chart. You can go to codes, right? Tap on an asset that you prefer if your choice. In this case, we can actually maybe, let's say, add GBP USD or GBP chef, which is another asset that I actually like. The British pound versus the Swiss francs. This is another asset that I like to actually trade because of its movement. So you just tap on an asset, go to section charts or chart, and then you'll be able to see something like this. Then what time frame should you use? Time frame might be challenging, but we have another tutorial specifically for you to actually learn and understand much more about time frame. Now, time frame, when it comes to analyzing the M's and W's, you can actually use small time frames such as 1 minute up until 30 minutes. And this is just for you to scalp the market, any asset that you prefer of your choice. Then we have 1 hour up until a month, and these are the highest time frame that you can actually use as to analyzing the pattern of an W and the pattern of an M. Now, when you use these patterns of an M's and W's in high time frame, you are looking to make more profit and taking less losses, because you'll be looking for entries in a smaller time frame. But then if you're using the higher time frame to actually take entries, then you'll be risking more. So it's not recommendable to actually use higher time frame to take entries, but only to mark the pattern. So if you find the pattern in 15 minutes, then use 5 minutes to find entry as candlestick chart as candlestick pattern that we have as to confirm an entry. We have candlestick pattern. Now, I wanted to mention something here so that you gain a better understanding. When we look at chart pattern, this chart is telling us a story as what's happening with the price. A chart pattern, as we are actually I've explained that chart pattern is just an easy way for us to understand when we should be analyzing for selling entries and buying entries. Now, when we look at the chart pattern in an overall or in a larger scale view, a chart pattern is a way for us to understand the price on the right here, the momentum. We're talking about the body of these candlesticks, and also the time, right? All right, maybe that might be challenging for you to understand. Let's actually move on to understand the most simplest thing that you actually should be looking for. Now, that's an M and W. So we can use it on our trading view, and we can just change time frame to 4 hours. I prefer any time frame. Now, we have also a double bottom and a double top. It's not the same as an M and W. This forms a W, but then as trading goes, every structure, every pattern will not work every time, will fail, and that's important for you to actually apply proper risk management. Now, this is an M. M only has only one entry, like this. If this one fails, it's no longer an M. If it comes down here, this is what we call a triple bottom. But now let's focus on a double bottom. This is actually a double bottom here on trading view, which is Swiss francs versus the euro versus the Swiss francs. Now this is a double bottom. This is a double bottom. We have two lows. We have two lows that are equal. And then when we look here, the graph moved like this. We're not gonna jump away from any movement that the graph did. And this is what we call a double bottom. So where we find entries over here for us to buy. This is a double bottom. Then we have a double top. Now let's go to 4 hours. And we're looking for, let's go to a daily. Yes, this is actually a gold, by the way. Yeah, this is gold versus the dollar. This is a double top, right? This is a double top. The graph move in this way, and we have another amazing chart that we can use. You just go to chart settings. Let's remove the crosshair. You just tap on an empty space, you go to settings, and you change the line type to the line bar so that you can be able to see this. Now, if we change here, let's go to line chart. Here's our line chart over here, and you'll be able to see very well that we have this. We have this. So this is what we call a double. Let's actually fix that. A double top, and the take profit it's here. So the candlesticks, they are more user friendly because of the graphics that we are there. And since I've explained that we have a double top, and the double top is just the same way as we're counting the 1, 2, 3. If this graph decides to turn and come back here, it will be now an M. But then because of these 3 levels of lows, it will not be an M, it will be a triple top. A triple bottom, it will be the same thing, that it's actually bouncing off 3 times like this. And then we have what we call a head and shoulders, right? This is a chart pattern that I actually wanted to explain to you so that you can actually understand much better. Let's go back to candlestick, and we can just use our mobile phone and just go back to there and change line chart to candlestick. And when we look at head and shoulders, we can actually just use let's use 1 hour. Oh yeah, we can use 1 hour. Zoom out and let's zoom in. Let's change the time frame so that we can actually look at for head and shoulders. Let's go to a daily time frame, go to 4 hours, and let's actually scroll back. Let's look for the head and shoulders so that I can actually show you. Let's zoom in here. Let's go back. There's a head and shoulders here on the upper level. All right, the movement went up, went down, went all the way up, went down, and went up. And this is what we call head and shoulders. The exit is here at this lowest price over here. Now, a head and shoulders is simple. You can count it in this way. You can count this as 1, you can count this as 2, you can count this as 3, you can count this as 4, you can count this as 5, and number 6, that's when you're looking for taking entries of making a sell going all the way down here to the number 1. That's where you'll be actually taking profit. Now, in setting a stop loss, you can set a stop loss based on the candlesticks that are there, but then you need to use a lower time frame to actually lower the loss that you actually are taking here, or the risk that you're taking over here. Now, we can change to the line chart type, because that's much easier, right? And you can zoom in. You can be able to see that we had all the way up and way down, up, way down. This is what we call the head and shoulders. So these are our shoulders, and this is the head or the top level. So this can also happen at the bottom level. All right, this can also happen at the bottom level. So we can zoom out, and we can use the daily time frame. We can use 1 hour time frame. Let's change the chart to the candlesticks because of the graphics, and this is just a head and shoulder for you to actually understand as to what you should be looking for in terms of head and shoulders. And this can be on the below level, and the head and shoulders cannot actually happen every day, but then you need to be patient with actually looking for the head and shoulders. There are some of the head and shoulders that I saw on the upper level, but then I wanted us to look at ones that are actually at the below level. And we're supposed to find, let's go to 4 hours. We're supposed to find the one that is on the below level, and let's actually look. And we don't have it here on. Let's go to a daily time frame. Remember, using time frame or changing time frame to time frame, it's important to actually use. Let's actually look for 15 minutes within the same day, which is an intraday trading. And there is another head and shoulders that is here that it's way more tricky to actually identify. This one, and you can easily see it went all the way up there. Then when it comes to marking, let's actually look for the ones that are actually more tricky. We have what we call a trend line. So let's tap here. Let's tap on this one. Let's tap on this one line. This is a trend line, and this trend line will do more work. So I want to actually demonstrate to you so that you can to understand. This trend line will do more work in terms of analyzing a channel. So a channel is basically simple. We have a descending channel in this way, which means it will be bouncing off like this. So in this channel, this is a continuous market. So meaning that if we have a break here, we have a continuing market to the downside. This is just a channel. Then we have a symmetrical triangle. Symmetrical triangle is simple and easy to actually spot. Now let's change time frame to 1 hour. Symmetrical triangle, or we can just go to, let's change time frame to a much better time frame, such as 15 minutes time frame. All right, let's actually zoom out, and it's just like that. And this is actually Swiss, and let's actually mark the symmetrical triangle so that you can actually see on what we're talking about. All right, now let's actually make an example here for you to see. A symmetrical triangle will be something like this and in this way. All right, now a symmetrical triangle, we are looking for a higher price above, lower price below, and a bounce off here, and a bounce off this side, a bounce off below, it bounces off this side and until it gets out, which means this is just a triangle in this way. Do you understand? It's a triangle in this way. The graph or the chart will be moving within these two lines that you put as trend lines. Now, you can also use what we call a horizontal line to mark a breakout. To mark what? A breakout. That is something that you should actually understand. Now, that's a symmetrical triangle. We also have a channel. A channel, this is what I've showed you, a descending channel, an ascending channel, which means the graph will be actually going up. So let's actually zoom out here so that you can actually see on what we're talking about as a channel goes. Now, this is trend line and this is trend line above. And this is a channel that is actually ascending to the upside. Then we have a channel that is showing a range in this way. But then when we use a channel like that, let's actually use a smaller time frame, and I've shared many chart patterns here, and then so that I can actually share much better on what's happening. All right, let's look at this channel over here. Let's look at this channel over here. All right, now this is a channel. We can use lines. We cannot use rectangle box, or we can just use the rectangle box just to pinpoint that everything is within the box, so that you can actually understand how you should be analyzing this one. You see here we have a bounce, we had 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 a bounce, and we had a break, and it came up. We had a break here. This is what we call a channel pattern, and the market will look. We are looking to make a sell. We are looking for it to break here and break this side, and then we're taking sells on this side. Are we together? You can also trade within the channel, which means when you are trading within the channel, you're looking to make 1, 2. On number 2, you're looking to make a sell. At the same here, 1, 2. On number 2, you're looking to make a sell. Number 3, you're looking to make a sell. Number 4, you're looking to make a buy. Do you understand? Using smaller time frame, and you can actually scalp in smaller time frame. Then, since now I showed you channel, I've showed you we have what we call wedges, Pennants. Wedges is just how the trend line forms. In this case, you can use let's change time frame. Let's change time frame to 5 minutes. A wedge is a simple thing, but then if you actually don't understand, you might actually have some difficulties. So let's actually mark a wedge so that you can understand. This is a wedge. All right, this is a wedge, but at the same time we're using lines of trend lines. You can see we had a break here, which means we are taking buys in gold. So if I go to gold now, I change to I can add gold, go to codes, and remember, if we're trading gold, that means that all the assets that they have USD on the left, we have USD on the right, not left. On the right, they will be actually buying. So we can just go ahead, place a buy entry on this one, and we can just buy. And let's accept. We can just buy on this one, and let's change lot size. Let's edit lot size to 0.5 and go within with a buy. The buy entry. Let's go to 5 minutes, because that's where we analyze this chart as the wedge goes. Now on wedge, it's the same thing as using a trend line. We had a break, so where are we setting our stop loss? We had a wedge here. You can see the wedge, and we can also use these lines to pinpoint the wedge. So now, where are we setting our stop loss? We are setting a stop loss at a below here level, because if this chart comes back in here, that means it's no longer a respected entry. So let's go ahead and set a stop loss. But then when we set a stop loss, we must make sure that the risk that we are taking in terms of making buys, you see we're risking $20 per entry, which is something that I highly don't recommend as trading. This is too much risk. given that how many entries did we take here, you can see how many entries we actually managed to take here, and you can see on how on margin how we are doing on margin. So that is actually way dangerous in terms of making this buy, which means we can easily blow this account altogether. So let's go ahead, and because we are risking, let's go to MT4 and go to all the assets that they have USD on the right. We are making buys like AUD USD, and let's go ahead, place a lot size 25, lot size 25, make a buy market. There we go, and place another entry, and we buy. There we go. All right, and then let's get another one for the last time, and we make a buy, and from there I'll actually share the results. I'll share the results as how we actually managed to take this trade as we did analysis. Now this is actually moving kind of slow. I don't know what's happening with my mobile phone, but we're having that issue anyway. So now is if you've managed to actually analyze using this chart pattern, and you're actually trying to use these chart patterns, then let me know in the comment section below which chart pattern are you actually trying to use, or which chart pattern are you exposed to. One last thing that I can actually leave with you is that make sure that your period separators are turned on if you're using this chart pattern, so that you know you're trading within this day, and all the analysis are actually done within the same day. I trust you actually understand, and if you have any question, let me know in the comment section below. I love you all. Stay blessed. I'll see you on another tutorial. Stay tuned. Subscribe, like, comment, share the videos with others.